Okay guys, so in today's video, I will just give a brief introduction and my review on the Nifty 50 index. So that means my understanding of whether the market will come down or go up from this point. So this is entirely my opinion. You may or may not actually agree to these opinions. It is just based on the present market structure and chart pattern, and also based on the global news events. Now, based on the chart only, if you just give it a closer look, so then you will find that this was a high here and this was a low here. So if I draw a line from here to here, so exactly it has mitigated this point and there is no fair value gap remaining, which means the entire buy side has been mitigated by the entire sell side and no fair value gap is remaining. And from that point of view, we can say that this point is a protected low. So I'll mark this with red and right, protected low. Okay. So since this is a protected low, market should not have any intention to come below this point, at least we can say, if it at all comes down. So this is a protected low. Now let us come to the most recent price action. So this is in 18,000. Anyway, market is not going to come here, but you never know. So let us come to the most recent price action, which is this one. So in monthly chart itself, you can find here that we had a bearish fair value gap, and price is most recently reacting from that bearish fair value gap. And according to our understanding of liquidity, that means the price should actually go from an internal range liquidity to an external range liquidity. So the closest external range liquidity is this swing point, these three candle formation, this swing low, and therefore this swing low is our closest drawn liquidity. I'll write here closest drawn liquidity. But you can see here in the month of January, it has given some bullish movement here. Why is it doing so? If this is the drawn liquidity here, then it should come actually down and mitigate this drawn liquidity before doing anything else. So for that, you need to go to the weekly chart here. In the weekly chart, you can see clearly that it has created a bearish fair value gap here also. Here also. And price is most probably reacting from this. This is more clear if you open the daily chart. So you can see here this fair value gap, bearish fair value gap, was drawn in the weekly time frame, and now in this present week, price has closed below the midpoint, right, below the midpoint. And even though the Thursday candle was such a big bullish candle and everybody was thinking that now it is time for buying, that means the chart is showing that Nifty is showing clear bullish intention, but actually I cannot agree, because in weekly chart it has not even closed above the midpoint. So you cannot say that it is bullish. You can say bullish only when a weekly candle closes above this fair value gap. Before that, you cannot say anything. So presently, if you consider the daily chart, so it has created this bullish fair value gap. This bullish fair value gap. So if price has any intention to go bullish direction from here, then in the next week, that means the first few days, probably Monday and Tuesday, if the price is bullish, then it will do what? Then it will create a bullish candle from here. It will respect this fair value gap, and then at the end of the week it will close, maybe not on the same day. So creating bullish candles like this, it will close above this weekly fair value gap. Then we can say it is bullish. But before that, if it happens in other way, that means bearish candles closing below this. Suppose Monday or Tuesday you find that bearish candles close below this bullish daily fair value gap, then it will be very clear that price has now an intention to come down to this ultimate closest drawn liquidity. So we have to be patient here and just need to see whether the price action is bullish or bearish in the first 2 days or 3 days of the week. And now another thing is worth noting here is these points. Look this point. So this high, and this high also, and also within these two. So if you go to the smaller time frames, you will find these highs here. These are all relative equal highs. So price can also go in bullish direction to mitigate these and then again come down. And also you can see here, from here to here, we are creating some kind of trend line liquidity. So it is also possible that it gives breakdown below this and reaches this closest drawn liquidity. So several possibilities are there. Now if you come back again to the monthly chart, you will find here that there are certain trend line liquidities here. So earlier price had already mitigated these trend line liquidities, but if you give it a close look, we had a fair value gap here, bullish fair value gap, but look at this price here. Instead of tapping into this fair value gap, it has just created this point just above this fair value gap. So for me, this is a liquidity. For me, this is a liquidity. So it can come down to this fair value gap. I know this is quite surprising that can it come to 21,000 level. So as per the chart, yes, it can come. And next, if you go to the weekly chart, you can see this candle, this liquidity candle here, used for mitigating these trend line liquidities, but still this fair value gap is intact. So there is a chance that it can come down below this point. Also, look closely again. We had a bullish fair value gap here in weekly time frame. Last time price came here, but again it failed to reach the fair value gap. So therefore, for me again, like this point, exactly like this point, this is also another liquidity. So why I am saying all these things? Because I just want to make sure that you understand that price has every intention, every possibility to come further down and below this level. And one should not be surprised by such movements. Just looking at the bullish candle of this week, one should not assume that now it is time for buying this because price has given bullish intention or shown bullish intention in the Thursday, and these are just retracements. I don't think this is a retracement, and price could have every intention to come further down. Anyway, we will see that in Monday. In the upcoming, also remember that we already had this fair value gap in the weekly time frame here, bearish fair value gap. So I was telling you about this relative equal highs created here. So I'm going to draw it like this one. Relative equal highs, basically trend line liquidities. See, trend line 1, 2, 3. Three-point trend line, right? And so price can give a breakout here, like trend line breakout, and come to this weekly fair value gap, and then it can come down again. So a lot of things can happen. We don't have to set ourselves ready for such big movements. We should be concerned about smaller movements, day-to-day movements, the very closest level of liquidity that the price is targeting, and based on that we should be clear about our bias. These things and also these things are quite dramatic things. We don't have to think about these things right now at this moment. I am just giving my brief introduction or brief review and understanding about the holistic picture. That's why I am just explaining these things. So that is all about Nifty in terms of chart. Just delete. I'm deleting all these things, and I'll just show in weekly chart or in monthly chart the position of moving averages. So this is something I need to enter. EMA3 is 20. In my case, I am keeping only EMA3. So this is 20 EMA. So from that point of view also, I would like to see price reaching 20 EMA and then giving bullish direction. So that also confirms my idea that price will be bullish. So if I just forget it, this will not happen here. The monthly level is like this one. This is the moving average level. Approximately you can mark here. Little bit higher or lower, doesn't matter. So price can come here. So which is actually this level, this your fair value gap level, this one, right? So, almost like this. So I would like to see if price should come actually, price is coming actually in the and taking support in this EMA 20 also, and also these points that I told you earlier. So this is all about charting and based on chart. And if you just want to see the effect of news, then there are 3 news events that are most recent. One is your FOMC meeting that is happening in Thursday, January 9, and then immediately after Thursday, that means in Friday, we have a non-farm employment change. All these are USD based news, but there will be effect of these news events on our Indian stock market as well. So you should always remember 3 such news events. One is FOMC, another one is non-farm employment change, and the third one is CPI. So these three news events also have some impact, large impact on our Indian market. That means Nifty and Bank Nifty, and also on stocks. So whenever these three events are coming, you should be careful and should not actually trade like anything. Just wait for it and let the price move in a particular direction so that your bias is clear. After the news event is over, then only you can take trade. So in Thursday and Friday, it is better not to take any trade and just watch the market movement. That is from the point of view of day trading. Swing traders can do anything. On long-term investment, guys are free to do anything. They are not bound by these news events, FOMC or non-farm payroll or CPI. But day traders and scalpers should always remember these three events are very important. So that's it for now. I have given a brief introduction, brief review of Nifty, its movement, my idea, my bias, and what are the three news events I am looking at before making any major investment or major trade in the market. So that's it for now. Thank you for watching this video.